Hello. This morning I'm going to show you a covered call on Wells Fargo and a couple ways to make it a little safer. This is Wells Fargo, and as you can see, a lot of this is due to the COVID outbreak. It went down quite a bit. We're on an up day, but the market's up 100 points on the S&P, 800 on the Dow, so it's a big up day. There's a small gap up, and I'll zoom in. But it's still on low volume. This could go down, uh, this Wells Fargo stock. So what I'm going to do is just show you uh, doing something a little different than just buying a call. Generally, when you buy a covered call, you might start at the June. It's May 18th today. So what I would probably do is do a 2250, and that gives you about 250 to have in downside if you choose to buy this and you want to just protect any more downside risk. So what you do is simply right click, buy covered stock. You're going to pay $21.79, so about 60 cents and change profit if you just let it go to expiration. But the real magic in this is to roll the option on this. So if you were to place this, and I'm not going to because I already have, as you can see, a couple positions on similar, but I wanted to walk you through it. So you're at about 70 cents, 73 cents profit. So if somebody called the stock away from you with this short option, you would basically make that 70 cents or so. However, if you want to roll it, what you would do is, and I'm going to show you. So we're going to do the 32-day. Normally I try to get closer to the 45 days, but July is a little far out still. So let's do this as if we're going to sell the June 19th and then buy it back at about the 18th day, which would be the June 5th. So what I'm going to do is I'm going to right click, I'm going to buy a calendar, and then I'm going to take the purchase, the buying it back or buy to close to June 5th. And you can see it'll pay about 29 cents. Let's call it 25 just to make the numbers easy. So let me give you an idea. If you right click on this, do confirm and send, you're into this about 21.79. So we'll take the 25 cents, which would equate to $25, multiply it by 12. That's 300. And then let's just went to 2180. So let's use 2180 since it's a more even number. So if you just made the 25 cents on this, you would be at roughly 14% on the year. And you have about 250. I'm going to close this, but you have almost $2.50 in downside protection. Actually more, considering you are only paying 21.82. So you basically have about $3 in downside protection. And then the question would be, how do you exit this? You can do a couple things. One, you could let it expire, and as long as the stock stays above 22.50, you make the 70 cents or so each month. Uh, the commissions are low now, so that might be worth doing. However, the other option would be to roll it, and you would just simply roll. Um, Once you had this option, you would roll it, and this is a proxy for what would happen in about 15 days to 14 days. Is you would roll it here, and you might get a little more at that point. We could probably get a little closer to a 45-day by going out to June 26th, and you can see it's worth closer to 40 cents. So, let's just for sport revise this to 40 cents, or let's just do 39. Now you're at 21% on the year. And one thing that you can do is you can roll your call up. So as the stock goes up, if the stock goes up to 27.50, you may want to be at $25. So you'll have to have additional margin. Generally, assuming it's 40 cents, you'd have to have $2.10 or $210 in additional margin, less, or actually 250 in additional margin, less whatever you capture in theta here, or in the option price. So that might be a little confusing, but it'll make sense in further videos. Uh, Essentially, you'll want to roll the short option and kind of roll it up and out as you go. If you're worried about the downside risk, just always keep that short call option underneath a buck or two underneath the strike price, and you should be fine. If you have any questions, please comment below or head over to our website and watch the video there, and comment on our website. On YouTube, if you would like it with the thumbs up icon, I'd appreciate it. And otherwise, if you have any questions or want to learn more about how we're trying to bridge options trading and the financially independent retired early movement, or FIRE, please head over to optionsonfire.com. That's our website, and we try to post things there as well. Have a good day.